FHA, Federal Housing Administration. Let's talk about FHA. A lot of people will tell you, don't get FHA. I love FHA. You know why? Because think about this before I go into it. In 2007, it actually started in 2005, but they didn't let the world know till 2008. When 2008 came in a market crash, the majority of the loans that was that caused the crash, that caused the dip was conventional, because with a conventional loan, the loan officers were able to fraudulently do bank statements and check stubs and things like that, which is horrible to have a person do that, especially to have their client to give them fraudulent information that ended up harming them, doing them more harm than good, because they knew they couldn't afford the $1 million homes that they were buying. But anyway, I digress. So, but with FHA, you didn't have a lot of default foreclosures with FHA loans. And the reason being because FHA, even though may seem a little bit strict, is not strict to the borrower, it's strict to the client. It makes sure that the client do certain things. And if you ever run into an underwriter that's a FHA, she will tell you, I ain't losing my jobs. I ain't losing my license. No, we're going to do this by the book. Because you see, with FHA, they have rules. Fannie Mae, Freddie Mac, they have rules that we must abide by. However, all lenders and banks, institutions have guidelines. It's a difference between the rules and the guidelines. And they are allowed, the lenders, the banks are allowed to have guidelines that is added with the rules. So say like the rules, 2-year work history, right? However, with that 2-year work history, the lender could say, hey, you got a 2-year work history, but you could have it showing like your bank statements. They have like bank statement loans. Show me income coming in your bank statement, something like that. So those are like what I mean about a rule. The 2 years is a rule. You have to have 2 years of income with a job or income, and then the lender or the bank can say, hey, we can do this with a bank statement loan. They have all sorts of stuff now, self-employment loans. They have different products out here that is working for you. But anyway, FHA is not as strict on you, the borrower, because they welcome down payment assistance programs. They help you by giving you the 3.5% down payment that you have. Like most traditional conventional loans, you have to have at least 15 to 20%, or you have to do an 80-20 loan. I don't know if they still do. One of my companies don't do 80-20, but 80-20 loans have to be done, some things like that. But with FHA, you can have up to 43% debt to ratio. Remember, I talked about that the other day. The front end, I believe, is 31%, and the back end is 43%. So remember, I explained like the front end of your debt to ratio is your bills, what you pay monthly, and the back end is the total amount of what you would be paying monthly, including your new mortgage and your interest rate and things like that. So that would be the total. So that's one of the things that FHA offer that a conventional traditional loan do not offer, for you to have a higher debt to income, which is good. The only thing that is not so good to some people, but I think it's still good, is they have that mortgage insurance for the life of the loan. However, once you purchase your FHA home and live in it for a year, do whatever, then you can always refinance into a conventional loan or, something like that that will help you get out of mortgage insurance. So with FHA, what I love is they offer multifamily residence. Even though you have to stay in it, live in it as your primary for 1 year, it is extremely good because think about it. You could get a multi-unit or an investment property for 3.5% down versus the conventional traditional loan. You would have to put 20 to 15 to 10% down depending on how you go, because now they have DSCR loans where you can put down 15% with some companies and still 20% with the others. But anyway, so if the multifamily unit has 4 units, right, FHA consider that a single family residence. If it have 5 units or more, that is really considered to be a multifamily loan. And I know that sounds crazy, but let me say it says, under the traditional FHA mortgage program, clients can purchase a home with up to 4 units. The advantage of this is that the borrowers can get favorable terms, such as a low down payment and a lower interest rate, which is really good, what I was just saying. And then they can typically multifamily. In addition, requirements is income credit, debt to ratio, debt to income, and again, it's less restricted than the conventional because your interest rate is not going to be the same as a conventional loan. You do get a favorable interest rate because, like I said, there's certain rules that the bank and the lenders have to abide by. They have to follow those rules. And an underwriter, trust me, an underwriter that is underwriting an FHA loan, she don't care who you are, how many deals you do. She is not going to jeopardize her license because FHA will take away your license to underwrite FHA loans and your chums. But anyway, so another thing that is really good about the 5 units or the 4 units, when you get a multifamily home, FHA and conventional lenders, especially DSCR, they use the empty or occupied units as your income. So that is so wonderful to know that these programs is going on, because here's a chance for you not only to be a real estate investor, but to receive additional income. Now, people say like, but how can I afford this and I can't afford this and I can't. Let me say this. Say for instance, we're going to go with the 4 unit. You have to occupy 1 unit, right? So the other 3 units are going to be, let's say hypothetically, occupied, right? What the underwriter does is take the appraisal, and each unit has a market value, a fair market value that gives it, say, hey, you can charge rent up to this amount. So what the underwriter do is take that amount that the appraisal have for each unit and separately times 75%, because you can't use 100% of the income, but you can use 75% of the income. Now take each unit. The smart thing is to do, live in one rent free. You ain't got to pay no rent. Take another one and make sure some savings. Take one and keep the property up. And take one for emergency. I mean, you could take one $1,500, and I know it don't cost that much, to get a person to mow the lawn and keep it clean and vacuum and stuff like that. You could take another unit and have that for in case of emergency. You could have another unit to put in your pocket to have savings for you, just in case of emergency. It could be done. FHA multifamily, 3.5% down, and you could get down payment assistance. This is an amazing product to have. Check it out. Call somebody.